A vast opportunity is rising in China. The country's bond market, once ridden with rules and restrictions, is now open to investors around the world. Valued at $12 trillion, it is the third largest in the world. But with little foreign investment, its qualities are not widely known. Chinese bond yields are higher compared to those in developed markets such as the US, Germany and Japan. The market is domestically driven and has shown lower correlation with global markets. This also due to the relative stability of the renminbi, even amid currency volatility in emerging and developed markets. Ultimately, the bonds offer potentially attractive returns and are one way to diversify portfolio risk. But how can investors access this opportunity? The two key markets are the China interbank bond market and the exchange market. These renminbi-denominated bonds are becoming increasingly important as funding pensions becomes a national priority in order to support an aging population. Beijing wants to spread the risk away from the banking sector by inviting alternative sources of investment. The anticipated growth of pension funds holds great potential for foreign investors. Since the launch of the Hong Kong Bond Connect in 2017, it's also easier to inject or repatriate capital in and out of China. Importantly, China's bond market is expected to be added to the Bloomberg Barclays Global Aggregate Index this year, potentially attracting $250 to $350 billion in foreign money. Other indices will likely follow suit, increasing the market's liquidity and appeal. China's onshore bond market has made great leaps and there is more to come. But with opportunity, there is risk. It's a market that is still immature and can be illiquid. Laws on defaults are light and poor environmental, social and governance standards remain. But with on-the-ground research, due diligence and a long-term approach, those risks can be mitigated. Aberdeen Standard Investments was one of the first qualified foreign institutional investors in China and has been investing since the 1990s. We believe this bond market is too big for international investors to ignore. We understand the complexities, and as active managers, we believe we may uncover the opportunities.